was also featured in 30 Under 30, right? And had a chance to be on a television show. So, before we jump into, the basics of entrepreneurship, it's very important to understand why people pursue entrepreneurship, right? And then we'll jump to the burning questions, right, of today's agenda, right? Um, why people jump into entrepreneurship, and how do you come up with a founding team, right? It's very important to understand what's the psychology behind people pursuing entrepreneurship, right? So, like sharing my experiences, I started when I was in university in my first year. I think I started when I was in school, right, where I started an NGO, and then moved to my university, and then started a tech venture. So I think I kind of capitalize on my experiences, my skill set of public speaking, of my had that courage to start, right? And it was always like learning from the mistakes that I did back in school to the university, and then when I moved into corporate life, and then to my full-time entrepreneurship, right? And finally, after a lot of failures and successes, did manage to build a six figures business, USD business, right? But it's very important to understand, even you'll see that people pursuing entrepreneurship after 50 years of age, that, but why do they do it, right? One of the major reasons is the freedom. They may hate their jobs, their bosses, and what they're doing. The second is the wealth creation, right? While you're working for your job, for jobs, while you're working on research, or you may get the salary, or it could be a cash flow for you, but then you do not have that capital gains, or you do not create that wealth. And it's very important to from an entrepreneur mindset, to create that wealth, he jumps into entrepreneurship, right? The third could be he may jump into entrepreneurship to follow his passion, his create or innovate, or maybe they may have burnt their bridges, and they may not have any other choice, right? So these are some of the reasons why people pursue entrepreneurship, right? And what I've learned in my experiences, these are like some of the experiences where I've bucketed, right? Now it's very important to understand what is your passion, right? So you could quantify it, or you could, let's say, bucket it into a couple of things. One is the skills. Look inside you, that what you have been extremely good at and what you love doing, right? For example, when I was in school, when I was in fifth or sixth standard, I was always very enthusiastic about extempore, about public speaking, and kind of had that business development. If you look at professionally, that business development skill, right, which I further capitalize and realize my strength. And I worked on it extensively for the last I think 15, 20, 25 years, right? And hence I was able to reach where I am today. So it's very important to understand, you'll see those traits over the last decades or last couple of years, that what's your strength. This could be analytical skills, problem solving skills, your extempore or public speaking skills, right? And the second is the hit and trial. While most of the audience, or the students over here are in university or in the schools, right? It's very important to do hit and trial, because it's like artificial intelligence. You tend to improve while you have more experiences, right? So, and the third is, increase the top of the funnel, explore as much as you can while you are in your first year or your second year, right? Still associate with different societies, intern at different places, right? And the last is have that consistency. I think consistency works really well, because consistency, is more important than hard work, right? You may work hard, but if you do it at discrete intervals, it doesn't really make that impact, right? But if you do it consistently, it makes a lot of impact. And I've seen that in my personal life, and a lot of other fellows as well, who are my entrepreneurs, or even the VCs, right? And the third most important thing is, what is success for you, right? Is it $1 billion valuation? This may need, you may need a very high scalable business model. Is it like $50 million in cash? Is it like $10 million in cash? Or is it like $5 million in cash? So, you have to think exponentially when you're looking at $1 billion valuation, right? You may have to think in a different way when you're looking at a $50 million in cash, and you may have to think very differently, when you are at let's say you're looking at $10 million or $5 million in cash, right? So you may get it with jobs, with SMEs, or all these, working 20, 30 years down the lane. You may have $5 million in cash, easy to do so. You're coming from good institutes. But then if you're looking for $1 billion valuation, right, these are mostly VC funded, some exceptions like Zoho, right, where these are highly profitable, highly scalable. You're able to reach out to a very large amount of audience. Now, it's very important to understand. Now, again, before jumping into this, I'll like to go back to that same questions. What are the traits you look for the in a founding team, right? And over the last 3 slides, you've seen some of the parameters which why people pursue entrepreneurship. The success can be different from different people, right? And again, the passion, or the will to pursue entrepreneurship could be different for different people. So I would love to understand, have more responses from the audience, why people, what you should look in the founding team. So if this the host can unmute the audience, or if somebody wants to answer that.
Oh, so they can write in the chat box and I'll read it out loud.
Sure. Please read down the please write in the chat box.
So someone has said drive. Like the drive or passion.
Yeah, that's important. What else?
Willingness to change the status quo.
That's again important. So if you're looking for another co-founder for yourself, right? If you're working on a great idea, right? What should you be looking at, right? What are the couple of things that you should be desperately looking at in the other guy?
So more replies have come. One has said hunger and one has said coordination. Same vision. Equally determined.
What else?
Common goals and interest. Trust. People who genuinely believe in your idea and you can believe them, because smart guys can betray sometimes, but a guy who's less smart but great with ethics is my choice. Then another one is never giving up attitude, not fearful of failures, willingness to take risk.
All right. So let me just summarize it in a couple of things, right? I think one of the key parameters of what I looked into my co-founder was how serious was he, right? The second was the skill set, the complementary skill sets that he had, right? And again, you could actually quantify how serious the other person is. If he's ready to put in the risk, he's ready to put in the capital, right? So I'll give you a great example. When I was building my venture, my co-founder took a loan of some amount and did put in the venture, right? He left his job and did, dedicated completely full time to the gig, right? So you could measure that, you could quantify that seriousness. You would feel that seriousness. That's one thing which is very important. You burn the bridges. You go all in, right? Unless and until you go all in, if you cannot trust yourself, or if the other guy cannot trust your idea, why would the investors go and put in the money into your business, right? And it's very important to have that seriousness, right? Second is the skill set. You need to have complementary skill set. If you're building a tech venture, you need a business guy, you need a tech guy, you need a marketing, you need an operations guy. You may not have all the things, but then you need to have two very important traits. You need someone to build something, and you need someone to market that or sell that, right? So that is the basic. That's why most of the VCs or entrepreneurs suggest to have at least two co-founders, and two founders have the highest probability of success, right? And third, when you're building the again, a lot of people ask me that how do you split your equity, right, at initial stages, right? Now, if you are at very initial stages, you should split it 50-50. And let's say if you're putting in some amount, maybe you're putting 5 lakhs, the other guy is putting in 5 lakhs, then, you have 10 lakhs of total capital, and it should be split 50-50. Both of the guys should come as directors, right? But there could be other cases as well where, you've already advanced with your idea, and you have built some traction, right? What I mean by traction is some tangible traction. Example, you are at 10 lakhs a month or 20 lakhs a month, then you may have more equity, because you've already taken that risk, and the other co-founder is joining in. And this could be tech advancements in the traction, advancements in any other form of validation of your business, right? And I think, if your co-founder is serious, if your co-founder has the complementary skills, right, he has the right credibility, right, and I think a lot of other things can be mitigated, right? Obviously the hunger is very important. Like I said, it's again quantified in the seriousness. If he doesn't have the hunger, why would he put in that money and go full time with you, right? So you have to look at all those traits while you are because it's like a marriage. You have to go with a co-founder for like another 4 to 5 years, right, before you can sell your stake to some other company, or maybe go into a merger and acquisition, right? And hence it's very, very important to have that kind of alignment, same vision, and all these different parameters. But yes, seriousness, the skill set, right, and having the right ethics is very, very important. Let's go into the next step. Okay, let me just close this. How do you go with a right business idea, right? There. Let's talk more about the business models. There's this B2B where you sell to the businesses. There's B2C, you sell to the end consumers, right? And so B2B could be, for example, Zoho is an example of B2B, right? Or like I'll give you another example, like your McDonald's or your is directly selling to the end consumer, right? Which is the B2C, right? And B2B could be something like Microsoft is an example of B2B. Then it's also B2C sometimes, but mostly B2B, right? Google is B2B. It makes revenue with most of the revenues with B2B, and then you have all the end consumers, which are where you consume the content, right? So it's very important to understand these two different business models, and again the distribution channels, right? The distribution channels could be different. It could be offline supply chain, where you could go through from manufacturer to end consumer, having a whole traditional supply chain, super stock list, distributors, sub distributors, retailers. And this could be online as well. This could be website, mobile application to directly to the end consumer, but this could be online to Amazon, Flipkart, eBay, end consumer. This could be direct sale from manufacturer to end consumer, and this could be export of services, products abroad. So there are a lot of different distribution channels. If if you've made something, you can distribute it. You can the right way to do it is, if you are innovating in the product, you find the supply chain, you integrate with the supply chain. You see a lot of these D2C brands coming up in India, right? Because Amazon, Flipkart, and all these online gives, all these HULs and the PNGs were having that monopoly, or were having that whole defensibility in the offline supply chain. But then Amazon and Flipkart gave a whole new power to the sellers. You could sell through Amazon, you could sell through your mobile application, right? And it's very easy to sell your product if you have something innovative, if you have something that people want, right? And then when you talk about how to become a unicorn, you need to have an exponential growth and linear expenses, right? For example, take an example of Zerodha. If you are into public trading, right? Linear expenses, you have fixed costs as salaries, and the software is like, could be one time cost plus some kind of maintenance, which is again human skills, fixed costs. But then if you talk about, it can be scaled very rapidly, right? And hence it can be scaled exponentially, right? So if you have to build a unicorn, if you have to go to $1 billion valuation, right, you have to have an idea, you have to have a business where you have fixed expenses, and then you have exponential revenues, right? It's very difficult to achieve that in some of the things. For example, services, you cannot build a unicorn with services, right? If you're consulting, very hard to build that, right? But then if you're selling a software, which is a digital product, you can do that. You have to develop once and you can sell multiple times, right? If you're selling, let's say, you made something a physical product, you have to develop once, develop a standard and a process, and then you can sell multiple times. Hence, it's very important to understand these fundamental processes. Going back to how to find the right business idea, I'll again go back to the last three slides. There are two different business models, the B2B and the B2C, the distribution channels, right? And then, when you talk about how to build a unicorn, uh, you have to figure out a way where your expenses are fixed, whereas, your revenues or your sales are exponential, right? Now, I would love to understand again from the audience, how do you find the right business idea, right? What are the key things that you should be looking at? Just type in the chat box.
Nice. So someone has said practicality, uniqueness. When we ourselves face that problem, existing problem that people face. These are the answers up to now.
Mhm.
It should solve a major problem in the society.
Mhm.
Is it different from the current solution in the market? When you know where you can fill the gap in the market, there is a demand. Finding solution to an unsolved problem, matching unmet demand with unrealized supply. When needs are greater than wants of the people.
Good. So I think, having a lot of these different answers, I think the first very important thing is to find the right business idea. You need to have customers, right? You need to think of, who's going to pay for your services or your products or your software, right? And sometimes, I'm not sure about how many tech guys are here. So I also come from a tech background. So if you are from a tech background, you are in love with the product, right? And so, if you're looking at from a business point of view, you do not have to be in love with the product. Obviously, you have to be very passionate about the business, but you have to be in love with the numbers. You have to have quick feedback cycles, right? The right business idea is very scalable. It is, so something, for example, I usually say to people that you should look at softwares, build softwares, you build it once and you sell it multiple times. If you are coming from a non-tech background, find a right co-founder who is into tech. India is one of the largest exporters of services and IT in the world. You build a software once and you sell it multiple times, you are operating at 100% gross margins, right? If you have the right customers, I have seen people billing $100,000, $500,000, $1 million to even one customer with software, right? If you have, like, this could be a cybersecurity software, this could be a CRM, and so on and so forth. But imagine you are at 100% gross margins. It's highly scalable. Then you also need to think of the defensibility, right? When you're thinking about your product, so again, a lot of people say that, so these are the frameworks, right? These are the frameworks, the industry frameworks, but it's not necessary that you have to follow all the frameworks. Sometimes you have to break the rules. I'll just give you an example. You may go with a simple product to $10,000 a month, and then you may come up with a very new product, right? Because it's very important to generate the cash flows, and then you come up with an innovative product which is defensible, which cannot be copied by other people. You may have some kind of patents or intellectual property around it, uh, or you decrease the price at economies of scale, right? This could be a software, this could be a physical product as well, right? So if you have the defensibility, if you have that advantage of achieving that economies of scale, and you can bring down the price at scale, you again, that's another kind of defensibility, right? If you're I'll say, if you have customers, right, one of the best ways to do this, to do business in India, is you already have a market and you put it online. Or let's say, you saw those Flipkarts and Amazons coming up in 2014, right? And then now what's happening is, you have all those artificial intelligence coming up and, optimizing the processes, right? uh, if it's very easy to make money if you can make wealth for your customers, or if you can reduce their expenses, which again increases their wealth or increases their revenue, right? So if you make 100,000 for your customer, he's happy, he'll pay you $10,000, he'll be very happy to pay you $10,000, right? And if you can scale it well, if you, again, like I said, if it's defensible, right, you should go and you should pursue it. Start solving simple problems first, achieve that cash flows. Once you achieve that cash flows, you can innovate. But if you keep innovating and then you don't achieve those cash flows, it would be very hard for someone else to trust you, right, with their money. That's how the harsh reality is, right? So again, there's no, it's very subjective. You have to look into the industry, but then these are the fundamentals that you should be looking at, the macro level fundamentals. Okay, so what affects valuation, right? Uh, you know, there are a couple of things which are affecting the valuation. You may see that the valuation is going to $1 billion, right? So one of the factors is potential to scale rapidly with incremental expenses and exponential revenues, like I mentioned. Product having a leverage with brand, intellectual property, distribution channel, or business model. Third could be very large market size in the right time to disrupt the market. And the fourth could be very strong team with proven execution skills. So in merger and acquisition, M&A, we usually say that the tech, team, and traction, right? If you have the right tech, if you have the right team, and if you have the right traction, you can win the market, right? And again, if you're looking from a valuation perspective, it's very, very important to have the defensibility, right? If you are a first mover in the space, and then very large market size. So people ignore the market size, but let me tell you, for VCs or for any investor who is coming in, the market size is the first parameter, right? Uh, okay. Uh, the other thing is, very strong team with proven execution skills. You might have seen the likes of the Kunal Shah and all those guys raising billions of dollars. If you've, let's say, built a business and sold it, if you've given a lot of returns to your investors, right, it's very easy to get more valuations in the next business, right? So when you jump into entrepreneurship, it's not like, sometimes people get lucky, maybe having $1 billion valuation in the one go, but then sometimes it's incremental. Even Elon Musk first sold the PayPal for like close to $200 million, and then went on to build SpaceX and Tesla. So it's not important that you uh, go for $1 billion in one go, but then it's more of like in branches. Think in tranches, think in pieces. Scrum model, where it says, think of getting the first $10,000, think of getting another $100,000, and if your fundamentals are right, you'll scale it to even $100 million as well, right? And then the question arises: how do you identify the right market, right? Because right, uh, you may have, let's say, the blockchain, you may have electric vehicles coming up, you have artificial intelligence coming up, right? And then you also have direct to consumer, right? So would love to have perspectives from the audience here. How do you identify the right market? You can mention that in the chat box.
So we have the answers. One says not too saturated. Another says consumer market analysis.
What else? So imagine you have millions of problems to solve, but how do you choose a problem to solve? How do you choose a market to solve? How do you go into a market, or find that right market which will make you the next $1 billion?
One says launch beta version of on Product Hunt. Market and competitive analysis. So that's all the answers.
Got it. So,
Yeah.
when if you're looking at right market, right? Let me talk from a venture capital perspective, right? Someone who's investing in money. I invested in a couple of companies, and let me share my perspective of what I looked in the market, right? So one, it should be extremely large, right? If it's large enough, if it's like at $100 billion or maybe $10 billion, even if you get 1% of it, you'll be a big business, right? Second, every investor wants to get ahead of the market. You make money if you invested in Bitcoin or any of the cryptocurrencies back in 2011 or 2012 when the market was down. Maybe invest today in something which is undervalued, right? Undervalued assets, and hence it's when from an investor's perspective, they're investing in businesses which are ahead of the market. For example, electric vehicle in India is going to rise in the next 5 years. Government is pushing it. Blockchain is absolutely rising. Artificial intelligence is going to optimize the processes and put a lot of people out of business, right? It's a big opportunity here, right? Then you see D2C is a big opportunity because the spending capacity is increasing. People are buying online, right? The consumer trends are changing after the COVID, right? So anything, where you see, there's some kind of a validation by the consumers, right? It has got started, if you did autonomous vehicles back in 2015 or 2014, right? It was very hard back then, right, to sell someone on autonomous vehicles. But now you see, even in India, you see level 1 autonomous vehicles, right? And then in other parts of the world, you see level 2, level 3 autonomous vehicles as well, right? But then the people who made serious money, like millions and billions of dollars, right, were the guys who identified the right market beforehand, right? And how do people predict those markets? Is because they do a lot of secondary research, they do a lot of primary research, right? And also it depends upon your core competencies. For example, I was having experience in supply chain and even the D2C and strategy, right? So I used my D2C and supply chain experience to start a venture called Sleep Labs, right? And if I didn't have that experience of building rockets, right? So I wasn't able to didn't have that energy to go from zero to and build that, and didn't understand that industry as well, right? So I had that credibility. I put that into picture, and it really worked for me, right? And I think that is how it has worked for my friends who are doing millions of dollars in sales, right? For millions of dollars in companies, right? And I think that should be could be used as a benchmark. How do you identify the right market? Talk to people, right? Look at, do a lot of read the trends. You can look at your story in 42 in India. You can look at the Economic Times. That's a good way of doing secondary research, right? Then there are a lot of other tools as well. Speak to VCs, look at how the VCs are investing in, right? And you'll see those markets that are coming up, right? And okay, so there was a question which said, if you are a non-technical guy, then how do you go and identify a right tech co-founder? Okay, so even in this session, we have a lot of guys from IIT Delhi who have a tech background who don't know how to sell. So it's very important, to reach out to people. You can use LinkedIn. You can use, you know, you know, reach out on LinkedIn. You can go through mutual connections as well, right? And I think if the hosts want to open up the group as well, they can do it as well, right? For matchmaking and opening up questions. I think it would be very fruitful for the entrepreneurs, right? So I think that is something which is very important for you to find the right, build the right team. And technology is something which is coming up really, really fast. We've seen IT as a major contribution to the GDP as well, right? So you cannot ignore that, right? And hence I'll suggest find the right team members through networking, through LinkedIn, and so on and so forth, right? Okay, so let's move on to the next thing, which is how do you identify the science of raising funds and the legal and the finance for startups. So let me just, okay, so when you are starting up, lot of things that you need to take care of. Uh, so, for example, someone mentioned in the comments or the chat box that you cannot trust a person, but at least the government of India or the laws of the government, right, give you you can have a document in place. You can have a co-founder agreement, right? You can so that your interests are protected, right? And there are a lot of cases in the past that I've seen personally as well, in my friend circle as well, where a lot of people have cheated on others. But then it's very important to have the right set of agreements. You get in 3,000, 4,000 on clear tax or legal salah and so on and so forth. There are a lot of platforms out there. You can get the documents from there. Then you should get your GST. However, GST is mandated once you're doing 20 lakhs of annual sales, right? Then you should go with company incorporation and compliances as well, right? Now again, company incorporation is like of three major types that you should be looking at. One is the private limited, the second is the LLP, and third is the proprietorship, right? So you can, so what I did was I started with proprietorship and then moved to a private limited company, right? The reason is, when you are a proprietor, you have all the liabilities. If something goes wrong, you are the police, or all the laws will take control of you, right? But then LLP or a private limited company, in these companies, your liability is mitigated, right? That's why it's called limited liability, right? And even in a private limited company, if you're going to raise funds, it's advisable to go for a private limited company because you can issue shares to the investors, right? And that's the only and most trusted form of uh, of incorporation when you are looking to raise funds, and most of the investors invest in private limited companies, right? uh, Second is have a mentor coach on board. Even Team India has a coach for each of its departments, right? Even to add to this, legal documents, and I'll really say that if you're having a agreement with your manufacturer, with your teams, with your employees, you should have all the legal documents in place. I think it's what I've learned is it's far cheaper to spend on the legal documents and having a right lawyer than having those repercussions later, right? And again, similarly for the CA, have a good CA. It takes like 15,000 something to incorporate a private limited company. And if you're going to publish patents, or if you're going to publish for copyrights and trademarks, now you can also go, you register a private limited company, you go and apply to Startup India, and then you may also be eligible for a 50 lakh seed fund grant, or you get waivers on the trademarks and patents and so on and so forth, right? uh, the second thing, what I mentioned, is have a mentor and coach on board. You cannot do everything on your own, right? I have my own set of strengths which I understand and which I know, and I also understand my failures, or also understand my weaknesses, right? I learn from my failures. So it's very important to understand the strengths and have mentors and advisors on board for all the other parts, right? So, for example, in my business, I look after the business development, or the fundraising, which I'm really, really good at, right? And may not be good at, let's say, the core tech, or let's say the other parts of the business, where I've gotten other guys to do that. And it's completely fine to do that. The third is having a buffer of savings. I'll say usually 1 year of your monthly expenses saved in FDs or other financial instruments. Nobody tells you this, right? But then if you're jumping into entrepreneurship, I'll suggest you to have a buffer of 1 year of savings, right? So that it's easy on you. It takes some time to take off from the ground, and it's very important. And the last is that don't be infatuated by solving hard and complex problems. Solve easy problems first and build cash flow assets, right? If you're looking for capital gains, people will talk about capital gains. Hey, your equity would increase to millions of dollars, but then you need cash flows as well in the beginning, right? You would have that capital gains only when, or you would increase the valuation only when your cash flows increases, right? And I think it's very important to look at all these parameters, which I've learned over my journey. And Okay, so I'll also cover up this particular slide, right? And how people ask me, how do you build up a buffer with $0, right? This could be, you could go, since all of you are students, I believe here, you may sell your skills. You could freelance. You could do service businesses or agencies to start with. You could resell, trade, or physical or digital products, or you could do jobs and other kind of engagements. But have that buffer, right? Once you have that buffer, it's very easy on you, right? So, and the next is, how do you hit the first $150,000 or 1 crore a year? That's the hardest, believe me. It was even the hardest for me as well, right? I think I used consulting. I was doing high ticket consulting in the US and Western Europe, right? It worked really well for me because I had that kind of credibility. It may not work. It may or may not work for you. Maybe something else works for you, which is, which you're confident about, or which you're confident about your skill set, right? Um, Another way could be, you build your intellectual property and license your technology to businesses. You could drop ship on Amazon or Flipkart, where you don't hold inventory but just focus on marketing. And then, the most important thing is increase the number of clients for your low ticket business. LTV CAC ratio should be high. So if you're into a low ticket business, then the lifetime value of a consumer, right, should be very, very high. For example, a grocery business, you may have very low gross margins there, but then you may buy it, the customer buys it on a regular basis, and hence, that gross margins accumulate, and hence the lifetime value of the consumer is super high, and hence you're able to make a profit over a long term. You're able to break even on cost of acquisition after some time. So my personal experience, high ticket things work really well, work on 100% gross margins, right? And that is how you go on to hit the first $150,000 or 1 crore in annual revenues, right? So rule of thumb to scale, it's if you're selling low ticket products, let's say at 10 cents, you should be doing inside sales, which is without human intervention. And then if you are selling at very high ticket size, you should be doing direct sales. If you are in the middle of, let's say, $100 to $10,000, and then you're in a dead zone there. And I've seen a lot of companies failing up there. My perspective would be, if you're selling cheap, sell it on Amazon, Flipkart, and sell it on Google Play Store and through ads without human intervention. If you're selling high ticket, sell it through direct sales. That's the best way out. That's worked for me, right? So before I move to the next section, the science of raising funds, I like to understand more about, so what are the key legal or financial challenges that you guys face, right? And I'd love to answer those questions as well. Please do mention in the chat box.
Guys, you can put your questions in the chat box.
So my question is, where I'm trying to understand your challenges with respect to the legal and the finance part of startups. What are the things that you don't understand? And I'll be happy to cover that in the next 5 minutes. Anything that you've been, has been a burning question and you not been able to have that answer?
So there's a question above in the chat box. It says that, could you please speak up on entrepreneurial success to people who didn't have the product or technical knowledge and were not from engineering background? Example, Boat and Airbnb.
I think a lot of people without technical expertise, right, or without technical formal education, right, build tech companies, I'll say. I think it's usually said, your formal education is just 5% of who you are, right? Um, Obviously, your institutes give you some kind of leverage, but then, I've seen people who are successful, they keep on learning continuously, right? And that's one of the ways. You need to have a high level understanding of things, right? If you are not from you if you're not a tech guy, then if you then the second option is, you can have a right co-founder on your team, right, who can help you mitigate through all those challenges, right, and you give some equity to him, right? So that's the best way to go with this.
Okay, thank you, sir. The next question is, what about building bootstrap solo micro startup?
Yeah, so you can do that. I think I did it myself. I funded my whole startup until it reached to a certain point, right? And then bought in the co-founder. That really helped me to negotiate on my equity, right? So you can do that. Have the right KPIs. What are the KPIs for you? Is it this could be average order value? This could be the LTV of the consumer. This could be what is the revenue that you're targeting, right? So you can always do that. If you are a tech guy, if you are selling it SaaS, you can really do that. I think that's very much feasible. And then once you hit, you can get the right co-founder. Team is important, and then you may go on to raise funds if you want to.
Okay, thank you, sir. The next question is, how can you find grants for the startup?
Okay, so if you're looking to find grants for the startups, so there are a lot of incubators out there, right? So mostly grants in India are for tech companies, as far as I have seen. But then there's some kind of even non-tech grants like Startup India Seed Fund, which gives a grant of 50 lakh rupees, right, to startups. But you need to have some kind of tech or traction, right? Or you need to have at least some kind of team, right? If you are building a technology startup, you have a lot of grants, right? You can get incubated at any of the IITs, right? Even one of my startups is incubated at IIT, and you'll easily get access to a lot of these applications through the network. So my perspective would be, if you are struggling to get the grants and everything, uh, get get into a technical institution like an IIT, where where you give some equity, right? And then you get incubated there, and they'll give you access to all those grants, etc. Okay, so any website where upcoming events for grant seed funding are advertised. So if you're looking at private funds, F6S is a website where you can look at, right? Startupindia.gov.in is another website where you could look for grants and seed funding. But then again, I suggest having a incubator or a technical institution on your site helps, right? The next question is, I don't understand how equity is sold, since I see that no one sells the stake, but still people buy stake. How? So again, so lot of ways equity is sold, right? So for example, if you're selling it to your co-founder before a venture capital round, you may transfer your equity to that person out of that 100% pool that you own, right? If a venture capital is coming in, then you have to issue new shares, right, to the venture capital, right? And then the investors or the venture capital may have different kind of shares, where they may sell it to different parties, right? Obviously, sometimes on the authorization of the board, sometimes may not be the authorization of the board, maybe not to the competitor. That depends on the term sheet they offer you while you receive before the funding, right? So again, it's a complex. I'll say it's a complex process. It took me some time to understand this, but once you get into this game, you'll understand what are the levels, and you'll play it really well. I'm confident about that. Okay, so what's the best time of getting an investment? Because I feel that investments can turn out as honey trap at initial stages. So should we work out to bootstrap and then to look for investments depending on industry or into? See, it depends. If you're looking to lose out equity, right? So you can look at investments at very early stages as well. I've seen people getting funded at idea stages as well, not a problem. But then the investors take a lot of equity. Usually the friends, families, the angels come at this round. Once you have traction, VCs come at that round. My suggestion would be, once you achieve a certain scale, then you go for a VC funding. I think it makes more sense. You lose less equity, you get right valuations. Also, it depends upon lot of the things as well. So it's very subjective. It depends upon how much runway do you have, how much savings do you have, how till what time you can, you can survive the company. So do you have any idea about Bitcoin or cryptocurrencies and blockchain technology? I mean, you started in this segment, so how do you see the future as well? Okay, so when it comes about the Bitcoin or the cryptocurrencies and blockchain, I think blockchain in itself is a very critical technology that would be used in a lot of different areas or industries, right? So again, Bitcoin and cryptocurrencies are all like a gamble, I really believe. If you want to gamble, if you enjoy gambling, you can do that, right? But there's no guarantees, or there's no rationale of how the market is fluctuating. So it's a very high risk, high reward thing. If you identify the right cryptocurrencies, your a lot of metaverses are coming in, and so on and so forth. You can look at those things, but again, there is no rational unless and until there are certain regulations like the stock market. I'm really not sure if you should be, uh, you know, gambling uh, unless and until you really, really want to gamble, right? So 9 out of 10 startups fail. So, okay, see, when you say the 9 out of 10 startups fail, I understand there are a lot of different reasons that startups fail. This could be, like I said, there are no customers, people, the teams run out of funds, a lot of problems in the teams, they're not in the right market, and so on and so forth. And you see a lot of startups even raising, after raising funds, they fail. Uh, but then you should at least try it, right? I think that is how you learn from your experiences, right? If you're scared of failures, I think entrepreneurship is not for you. Okay, so sometimes there are a lot of businesses. While in COVID, they had right business models, but they were like it was very hard for them to survive. Look at hospitality industry or Book My Show and other ventures, right? So I think sometimes it also depends upon the market. A lot of uncertainties in the market. Okay, how they bring it? Can you explain it deeper? Okay, so accelerators and incubators. Nadeep asked this question. So accelerators and incubators obviously have their own set of networks, right? A good accelerator or incubator definitely helps, right? They have connections with the venture capital funds as well, which can help you with the funds. They also help you with business development. That is another area of where you can really look at, right? Uh, so yeah, I think it's more hands-on at the accelerator level because you're paying a premium with equity because they're giving you less funds and more of advice and one-on-one mentorship. So I think that's how you're compensating that. Okay. So if you don't understand sales and marketing is, I think sell. I'll say just try selling. A lot of things you do by executing. Entrepreneurship is not learned in books, right? Even I'm sharing my experiences. I'm not sure what would you be. You would obviously get a high level understanding of things, but then unless and until you execute, this session won't make sense for you. You have to execute after this session. Okay, so I'll jump on to the last slide or the last important thing, right? The science of raising funds. So, when you talk about the fundraising, obviously India last year you saw a lot of IPOs coming in, right? So I think it's very important to understand how do people raise funds. The first way is obviously through the three F's: the friends, families, and fools, right? So the second is the angel investors, the third is the incubators, and the fourth is the institutional VCs. If you are at an idea stage, your father may trust you, right, and may put money into your business, right? But it would be very hard for me to trust you, right? So I may come at an angel stage, right, where you have some kind of traction, where you have some kind of things built, right? The third is the incubators or the accelerators. Again, a lot of every incubator has its own investment thesis. Every accelerator or micro VC has its own thesis, sectors, right? And you may look at those kind of incubators which fit into your industry and your business. The government is doing absolutely great in form of giving you grants if you have a tech business, right? So I think you should apply to grants like Nidhi Prayas. It's like a 10 lakhs grant, SISF 50 lakhs grant. Then there's Tide 2.0, 4 lakhs, 7 lakhs. All these different kind of grants that you can look at. Again, all these partner institutions give that. Institutional VCs come at a later stage when you are at 20, 30 lakhs a month or 50 lakhs a month. So if you are starting up, I'll suggest, don't go with that, right? Okay, so just a friendly advice, which I always give to, all the entrepreneurs who are starting up, right? So I'll say, don't buy liabilities. Instead, build a savings pool or a buffer after your first paycheck, right? And it's very hard to resist that, right? So I think I'm sharing my mistakes and what I learned from my mistakes, right? So it's very, if you've got like once you are in your bank account, it will be very hard for you to resist if you are at 25 and you should not buy a Mercedes or a BMW, right? But you shouldn't do that. Invest in assets, right? Build cash flow assets, digital assets like YouTube, Instagram app, physical assets are capital intensive. uh, this generation, you and me, have that leverage of building cash flow through digital assets. Let's not underestimate that, right? And solve in tranches. Aim for the first $1,000, then $10,000, and then $150,000. Even though the ways may not be scalable, once you reach $10,000, you can find scalable ways, right? Easy to think of scalability when you are already at 10 lakhs a month or 20 lakhs a month. Have legal agreements in place, even though your co-founder is your best friend. And the last is have mentors, coaches on board. Be vulnerable to them. That is how you learn. So you need to have all those guys who you can speak to, right? Understand, and share all of these things very openly, right? If you can do that, right, I think your mentors, sometimes I see that the mentors choose you, right? uh, I had a chance to, so in one of my companies I had Microsoft India CTO as board of advisors, right? I really think that the mentors choose you. I think they see something in you which even we sometimes are not able to see that, right? But then if you got a mentor, if you got some kind of interest, capitalize on that, offer them equity, compensate them. They may be sitting at $1 billion or multi-million dollars, but then you know this is sometimes a sweet gesture, offering them equity, or helping them out, giving the first hand first, right? A lot of ways to, so you can look at Y Combinator advisor agreements, right? To have someone on board as an advisor, right? So that is how you kind of build your business, right? So I'm open to questions. Any questions? If anyone has, please mention that in the chat box, and then we'll just have a kind of a giveaway question.
So Navdeep has written a question in the chat box. So it says that, so you also talked about tech co-founder, but I feel that having a CTO is a much logical decision to go with, because in my case, I found tech enthusiasts, but at a later stage, I believe that the skills of my employees can easily surpass my co-founder. Also, being from IIT Delhi, I have good knowledge of tech. The thing is, I don't want to get burnout from it. So going with a CTO for a while could be a good decision or not?
Okay, so I'll again go back to the same thing. Uh, if you find that right person, right? So I think you asked from the perspective that whether you should dilute or equity or not, right? Now, if you're able to raise funds, if you're able to hire a CTO, right? CTO, go for it. I've seen a lot of people do it. Even I have been doing it, right? That way. So if you have that buffer, if you can compensate people, if you can get their bread and butter sorted, I think that's fine for it. But if you're not able to do it, I think you can look at equity as a route, right, where you compensate them, right? But then it's very subjective. Being from IIT Delhi, if you're confident about your skill set in technology, then you can maybe hire a business guy if you already sound in technology. But then if you are not sound in technology, then you should go for someone who's sound in technology. What else, guys? Open to questions. Any other questions? Okay, so there are multiple ways of raising funds, when you are at a very early stage. One of the best ways is, there are a lot of incubators coming at, very pre-seed stage or idea stage, right? These days, you can look at all these different, even IIT Delhi has an incubator, right? Then you see that IIT Kanpur, IIT Bombay, and IIMs also have an incubator. So you can look at you can talk to the portfolio companies about how they have been doing, how the incubator is doing. And if you feel that incubator can add a lot of value, you should go for it. And incubators will give you some good amount, 20, 30, 40, 50 lakhs in form of grants. It'll take some time, but yeah, it really help you. At early stages and at a student level, I think you should not be worrying about diluting your equity. Explore as much as you can. Even incubators are looking for good entrepreneurs. What else,
Sir, I
guys?
think that is all the questions.
Got it. So just to end with, I think as part of the giveaways, right? What you can do is, guys, do share your learnings on LinkedIn. Just mention all your 3 or 4 learnings that you had from this particular session, right? And tag FinOak and tag me as well, so that my team can also look into it. The most interesting, so we'll be giving, 5,000 INR in Amazon gift cards, right? It will be like the first, second, and third, right? We may extend that as well. Last time we did like more than 10,000 of giveaways, right? So do mention your learnings on LinkedIn, right? The whole perspective of this session is so that I can share my experiences, and so that you learn and you share your experiences with other people as well, right? When you reach at a stage that you feel like sharing. So it's about we're going through this whole wave of entrepreneurship in India. It's very, very important to support all the micro entrepreneurs. If you find an entrepreneur around you in maybe village, in a small city, who may not have the resources that like you have, you should go and support them, right? So to support the entrepreneur, support the vision, and do share your learnings, right? And so this would be valid till tomorrow 12 p.m. The entries would close till then, and we'll announce by tomorrow EOD, or latest by Monday. Okay, so there's another question. How should I reward my finalized team in the company besides my trust? I don't want to dilute the equity among a lot of members. Yeah, ESOPs can be a way of diluting the equity. So you can have an ESOP pool of 5% or 6%, right? But then ESOPs again could be released on milestones and could be done with vesting in a cliff. So you should study this vesting in a cliff. If you're giving equity to someone, or if you're giving ESOPs to someone, that comes with like 3+1 vesting in a cliff. So if somebody leaves before 4 years, somebody leaves before 1 year, he may not get equity at all. And if somebody leaves before 4 years, right, he may get equity basis on the vesting. Okay, so the question is, should we commit full time in startup idea in college? I think, see, I did that, and I do not have any regret of doing that. But again, it all depends upon your drive and interest. I was very much driven in for entrepreneurship, and I thought that this is something which would solve, which fits into that ikigai for me, right? If you feel that you can do that, if you don't feel that, if you want to build the backups, right, you want to explore more. So there's no right answer to it. I've seen people studying in India, then moving to the US, and then starting out after completing their universities. I've seen people starting in universities and being successful. I've also seen people who have never been to university and then again successful. I've also seen people who've been to universities and then spent 20 years in the corporate industry and then been successful. So there's no right answer to this. I think it's about if you have the desire, if you have the drive, go for it, try. And like I said, focus on the cash flows. If you're hitting 5-10 lakhs a month, then you can look at pursuing it full time. But once, if you don't hit the revenues, right, what's the point of doing it full time? Yeah. So Nadeem mentioned about giving up legal things with my co-founder. Okay. So I think it's better to have things written down, even if you have if you are even if you trust the person, right? And yeah, Sneer, I don't want to comment on Sneer. He's a successful entrepreneur, right? And I respect him, and he's given great returns for investors, and he's built his business, right? And I think we are trying our best as well. Yeah, we'll share the PPT.
So I
Okay,
think that was
guys.
all the questions. So thank you, sir, for this wonderful session and for your guidance. You put years of valuable experience into this one insightful hour. Thank you so much. I thank the audience for being so interactive. For more questions and any queries that you might have, we will add sir on the WhatsApp group and share his LinkedIn on the group and here in the chat box. You can PM him there. We hope the session helped you. I request all the participants to fill the feedback form for e-certificates. We will share it in the chat box. Fill in your full name and the correct email ID for the certificates. Our team will get back to you within a week. Thank you. Thank you,
Thank,
sir.
thank you, guys. It was great having this session. So I think for all the questions, maybe the host can open up the group. I'll be happy to answer those questions in the group, in the WhatsApp
Yes,
group.
sir. We'll do that. Certainly, sir.
Okay. Thank you, guys.
Okay. Thank you, sir. Thank you. Ananya, could you please share the link?